Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's October 9th. Hope you guys had a great weekend. Hopefully, it was a long weekend for you guys with the Columbus Day yesterday. Happy belated Columbus Day. We got just a few items here, not much here. We got the NFIB Small Business Index for the month of September. This kind of talks about the optimism in the small business with the small businesses. And we are at historical highs at 108.8, and we did slip a little bit down to 107.9. Again, we got to keep in mind this is historical highs, and still employers are still feeling really good about where things are at. The only real big complaint they have are finding people who qualify for the work, and that seems to be the biggest thing. We have more job openings than we do really for people that could fill those positions, and which is obviously a nice problem to have for a change. So this is basically the biggest problem that they are seeing right now that's out there in the workforce. So let's kind of jump ahead here to the headline news. Stock market's up. It's kind of taking a break. It was taking a little bit of a beating towards the end of the week with the higher yields out there. So it's taking a little bit of a break. We got more Fed members speaking today, this week. Last week we had, throughout the week. This week we got pretty much the same thing. Fed speakers will be speaking. And last week there was really no huge influence by the Fed speakers because pretty much everything that they said is in line with what the investors were thinking about the Fed. So there was really no surprises, and we'll have to see if that continues this trend this week or not. Let's see how this is playing on the bond market. The bond market is up a little bit. As you see, we touched this floor of support here. We pulled back. Right now, we started right about the same range, just slightly lower. But right now, we're up about 19 basis points. So definitely an improvement from where we left off on Friday. So we got a little bit of a reprieve so far today. And as you can see, we're still in this overbought position here. Or I'm sorry, oversold position here. And so don't be surprised if we see some type of leash effect that we kind of saw a little bit like I think it was right around here. We got a little bit too far from the, what was it, the 50-day moving average. We kind of got pulled back, and then we kind of came back down again. So it was right over here. Sorry about that. We got pretty close to the 25-day moving average, and we dropped again. So don't be surprised if we may have a little bit more, again, another one of these leash effects over here. Same thing over here, the 10-year Treasury. As you see, we're in overbought position, or yeah, overbought position. The other one is oversold. Just go. Sorry, I try to keep these things in train of thought there, but overbought position. And again, we're pulling quite a ways from this 25-day moving average. We'll see if it kind of drops a little bit. This 3.25 ceiling is kind of holding here, so we'll have to see if it continues to hold. Because as you saw, we broke two important ceilings here. We had the 3.11 earlier last week, and then we had the 3.2, and it broke above both of them. Right now, we're down to about 3.21, and we'll see if if it stays above this 3.2 range, or if it could break down a little bit further, closer to the 25-day moving average, which is hopefully the case. For interest rate sakes, people out there who are looking for get a little approval with the interest rates, because the higher yields is representing higher interest rates for those who are looking for mortgages, either for refinance or for a purchase out there. But today we got a little bit better in pricing, which is obviously a good sign for those who are in the market. All right, so if you guys want to get any updates, come over to Twitter. You can find me at Mike Bjork. I do post any changes in the market, and of course other items out there as well. But otherwise, you guys have a great rest of your day. We'll look forward to see you guys tomorrow. Thanks for watching. Bye-bye.